and thank you to Capital Link for inviting us on the panel today. So we're going to be covering off the topic of capital at sea. We're going to be looking at both investment and financing strategies. We're going to split the session into two parts. We're going to first focus on investment strategies. We're going to hopefully get some views on what are good investments at the moment, with a particular focus on the GCC. We're also going to consider financing strategies as well in the second part of the session, and how financing can also support these investment strategies as well. Got an incredibly diverse panel today, so we're going to have a really insightful and interesting discussion. Going from my far left, we have representing an investment manager. We have Felix Nölke from MPC Capital. We have Anne from ICBC Leasing, representing PRC leasing companies. Then we have Souren Gharnagharian. Now, Souren's going to have two hats on today. He's going to have his investment hat on from the Borealis perspective, as well as his debt and financing hat from an Australis perspective. And then Nicholas Petrakakos from Alantra. Many of you will know as an advisor across the entire investment and debt spectrum. So a fantastic panel. Thank you, everyone, for joining us. Felix, I'm going to start with you, if I may. Let's start with MPC Capital first, because MPC is a global investment manager focused on maritime energy and infrastructure. Very much distinct from MPC Containers, being just one of your investments, very successful one, I must say. So then when we're talking about MPC today, we are very much talking about MPC Capital, just to be clear. But Felix, as a key investor in the maritime sector, and given the success of MPC Containers during the last few years, that I'm sure everyone's going to be very interested. Everyone's got their own views, but everyone's going to be very interested in the areas that you're looking at the moment, focusing on from an investment perspective, and what your focus is in the GCC at the moment.
So first of all, thank you very much for having me. So from our perspective, as you rightly said, we are focused maritime energy and infrastructure investor. We're in the process of diversifying our holdings. As you rightly mentioned, we've been quite well known for our container investments in the past. And within the last 18 months, we diversified also into offshore and offshore wind, as well as into the chemical space, where we recently acquired 2 vessels. Hence, we are very much also looking into niches where we can still identify value. I think it's worthwhile to note that we as MPC Capital, we very much live in joint ventures. So that means we always looking for strong partnerships, both on the capital side as well as on the project side and project originating side. Hence, this is also part of the reason why we are here. So looking for partners both on the capital side, but also to team up with good operators and originating new investment projects for the future.
Great, thank you. And I mean, one of the points that I've heard a lot, and it's not just in this region, but globally, is for groups such as yourself really trying to find value at the moment. It is difficult, values are high, rates are very high at the moment. Now, I'm sure you're not going to want to give too much away, but really, where are you focusing your attention at the moment, and where do you feel that you're going to find the yields that you need?
Yeah, I think very much what I just mentioned also as a starting point is we are focused on niches, so where we still feel there's value. So touching a little bit upon the offshore investments that we took. So we did not invest into very large assets, but ultimately invest rather smaller ones, where it was important for us to find the right partners to team up with, right? So it's not necessarily only when it comes to the asset or the asset class where we feel comfortable, but really partnering up with the right people that can provide value. Hence, that's also the way that we had approached the offshore wind market, similar how we also approached a more niche type investment into the chemical space, and that's going to continue along those lines. So that's our way forward, at least for the next coming months and years.
Okay, great. We'll come back to some your crystal ball gazing in a moment, of course. But Souren, maybe if I can just turn to you for a moment, and really with your Borealis hat on for the moment. From an investment standpoint, you occupy a very similar position as MPC in some ways. Can you just give us a view from an investment perspective from your side, and are you seeing things in a similar way as Felix is, or quite differently?
Yeah. Hi, everyone. Thank you for having me. Maybe to give you context first about the group, Borealis Maritime is an investment manager dedicated and focused to the marine space. So we invest across the capital structure with both debt and equity, but we're focused purely on shipping and offshore. And the Middle East is a very important, or Asia generally, but specifically the Middle East is a very important part of the world for us. Both on the equity and the debt side. We have a few colleagues here, and we're continuously expanding our footprint in the region. So to go back to the question, with Borealis, we of course raise funds from institutional investors, and it to some degree depends on the mandate of the investor or the institution that we partner with. And to give you a flavor, we have a pocket which is more opportunistic in nature, which is more counter-cyclical, and a lot of that pocket was deployed in the offshore market in 2018, 2019, 2020, and 2021. And of course, we're sitting quite comfortably at the moment on assets that have appreciated significantly in value. We have another pocket that we deploy from, which is very different in nature. It's more focused on yield plays. It's more infrastructure related. Of course, still with focus on shipping and on vessels, but more from an infrastructure mindset, where we look for contracted cash flows over multiple years from strong counterparts. With that pocket, we've been able to deploy across the sector and chemical tankers and container ships, and in dry bulk. We don't have a specific sector or a specific segment that we focus on, as long as we can structure around the requirements of our mandate and the opportunities we see. So we wouldn't focus on only one asset type. We would focus on the counterparts we deal with and on the merits of the deal that we're looking at.
Great, and then maybe we can look at this maybe a little bit more specifically. I mean, that's a very great general overview, but could you maybe talk a little bit more and go into a bit more detail about your kind of current strategy towards the GCC from an investment perspective, please?
Sure. So, I mean, to go back to the infrastructure pocket, one of the natural avenues where you might expect we can deploy capital into is the offshore segment, where there are large oil companies here or EPC companies that would provide contracted cash flow for multiple years. But that's actually been a sector that we haven't deployed enough capital in our view. And we're here, we strengthen the relationships with these players. We are, of course, also very lucky that Dubai generally has become much more of a global rather than just a regional player in the marine space. A lot of dry bulk and tanker operators have set up shop here. And in fact, one of our mandates requires our investment to be linked to Asia or the Middle East in one way or another. So chartering to the Asia-based, and when I say Asia, I mean also the Middle East, charterers of those global outfits has been quite helpful for us. So we're continuously developing the relationships with the operators and the end users of the various assets. We try to increase our footprint in offshore. One of the challenges we have to some degree is the termination for convenience clauses that we see in some of the offshore contracts. But we are trying to find ways to work with the end user and structure also around that. And here I'm obviously talking from a Borealis point of view, from an equity point of view. When we get to Australis, we have found comfort with those clauses and contracts. So perhaps offshore is one of the areas that we're focusing a little bit more on at the moment.
Okay. Now, you've picked up on quite a few points there. And the one bit that resonates between what you've just said and what Felix has said is just the diversity of the sectors that you're looking at. And what I'm going to ask you to do now is just gaze into your crystal ball a little bit for yourself and Felix, and maybe Felix start with you if that's okay. So for 2026, everyone's going to be listening now and taking notes. You know that, but if you were to pick one of the sectors that you've focused on and mentioned so far, which is the one, and why?
Yeah, I think most likely we are going to continue focusing on chemicals for the first half of 2026, primarily due to the fact that we also see industrial value, also driven by investor demand. So it's more of a defensive or conservative type investment that we're seeing there. At the same time, we are starting to look into dry bulk as well, but I would say if I was to pick something, most likely it's going to be in the chemical and smaller chemical space.
If I was to pick only one, I mean, we had ATIPEC last week here, and a lot of the research material shows the order book for offshore is so low on the larger size of the offshore units. So I think just purely looking at supply and how constructive that picture looks, I would pick offshore.
Great, thank you. Nicholas, you've heard what Souren and Felix have had to say. You're obviously advising a very diverse group of clients, not just in the region but globally. Anything that you've heard there different to what you've been experiencing and advising your clients on in recent months?
First of all, thank you for having us here. It's great to see this event taking off with a bang. Things are pretty much how we discussed them. I think the governing, let's say, the overarching theme, both from what we heard from Souren and from Felix, is we're looking for contracted cash flows. This is something that we see in the global markets, not just for shipping, the rise of effectively private credit, which is the same in our industry. If we look 5-10 years back, most of the opportunistic funds were not around. The product has changed. We see different LTVs now, different structures, mostly on the debt side in the form of leasing. Also, the general investment theme is more or less the same. We all face the same markets. The assets are probably expensive, or they look like they're expensive, although in my view, there are elements of value that have changed significantly compared to what we were seeing in the past. In the past, you would see demand and supply. You could more or less predict it. Now you have all these black swans, pink swans, you name it, that add a lot of volatility in the asset, which increases its valuation in certain cases. But the Middle East per se, and UAE in particular, it's a market that on its own has changed quite a bit in the last years. And let's say when we started our activity in 2019 here, we were focusing primarily on restructurings, both on conventional shipping and on offshore, oil and gas offshore. Today, there is absolutely no discussion about restructuring. It's growth, it's fleet renewal, it's establishment of large national oil company, shipping companies, affiliated shipping companies. You have capital not only going from the Middle East, the rich, let's say, countries outside of the region, but also a lot of capital coming in, both in the form of private credit, as we discussed, but also with quite a few companies having been listed and actually giving access to international investors into what is happening in this part of the world.
Well, maybe if we can kind of pick up on that last point about the development of the regional hubs. You've spoken a lot about the UAE. I mean, Souren mentioned the development of regional hubs as well. But it's not just a UAE issue, is it? I mean, you have, I was in Saudi Arabia a couple of weeks ago. Stephenson Harwood opened 2 offices in Saudi Arabia. And one of the key areas of focus is transportation and the maritime space. Now, I know you and I have discussed Saudi Arabia for quite a few years now, and others on the panel have been active in the region as well. But I mean, maybe you could develop a little bit around that, because Saudi is very much pushing that kind of regional hub and what they're doing from developing their maritime business.
Yeah, of course, we see a similar trend across nations here in the region. I would include Oman in that as well. to a certain extent. The fact that the UAE has been the most outspoken, they opened the doors first, both to people and capital, it's what drives that. What we have seen is that, of course, the region has started from a very entrepreneurial, let's say, foundation. A lot of people that came here started their own businesses. At the JLT, there are about 600 to 700 shipping-related companies, which is numbers similar to Greece. So you see that a lot of knowledge has come into the region. What has changed in the past is there were conglomerates developed. So all this universe now is servicing, to a certain extent, these conglomerates, and for good reason. At the end of the day, oil has to be extracted, and the system around it has to work. But we also see, as you said, this similar situation in Saudi. Saudi was a bit late to sort of open its doors to international capital, international activity in general outside of oil. The maritime sector seems to be very important, and I think what we all see is that there is a strategy locally to control the supply chain, both of oil, products, chemicals, but also importation of commodities, importation of finished goods. We've seen large container companies emerge under the control of national champions. We see also in Saudi, Folk Maritime is trying to pick up that with the support of PIF. So there is also a lot of infrastructure being built, both on port side, but also shipbuilding infrastructure. I think we've all seen news of Ultramax is being built in Saudi, or to be built in Saudi. So there is activity around the whole maritime universe, if you will. Of course, shipping and commodity shipping in particular is leading the way. We see a lot of people coming in from Europe that have held very senior positions, and now they're running companies here. So there is a transformation and importation of knowledge first and foremost. Capital is ample in the region. That's not the problem, although we don't see it very efficiently deployed in some cases. But the fact that processes are being established, companies are being established, points to a very bright future in what can be built here. And it's, I would say, a copy-paste of what has been done in other industries within the UAE. You can see Emirates Airlines and other airlines around the region have become very international. Etihad is very international. You see even Saudi now expanding globally. So it's a similar theme, opening the doors of the region to the world. And of course, the world is appreciating a very efficient business environment with support from the largest local companies here in the UAE and the region.
Great, thanks, Nicholas. And then just to wrap this kind of the investment side up as well. I mean, we've heard from Felix, we've heard from Souren. From your clients, where in your opinion are going to be the best opportunities over the next 12 to 18 months?
I think I will echo what Souren said. I think offshore is still a very interesting place to invest, and there is a need to do so. I don't see oil exploration, production, well maintenance, and all the auxiliary activities, going away anytime soon. The countries here rely to a certain extent on that, although that also changes to a certain extent. So if I had to pick one, it would be that. Of course, we are sort of biased being here. If we were discussing this in Germany, probably you would hear the same rationale for large MPPs that will serve the European Union. But I think, given where we are, it's and the capital that is expected to be deployed in that, I think the offshore oil and gas offshore sector is something that will remain interesting in the next 12 months.
Yeah, and I think that's one of the keys, isn't it? It's the investor base and what they're comfortable investing in as well, which is one of the key points. Okay, well let's move away from the investment side a little bit and move towards the financing part of the discussion now. And you've been sitting there very quietly listening to what's been said by the other panel members. So very much like to turn to you now. And obviously, being a PRC lessor, it's been quite an interesting year, to say the least. let's tackle the elephant in the room, because I think it's the point that I think the audience are going to be quite interested in, because obviously with USTR earlier in the year, the PRC countermeasures, and then the subsequent more recent suspension, there's been some wild suggestions in the maritime press that, is USTR going to be the end of PRC leasing? It's not what we at Stephenson Harwood see by any stretch of the imagination. Quite the opposite, in fact, given the amount of activity involving both lessors and lessees. But very much grateful from your perspective, both from ICBC and more generally from a PRC leasing perspective.
Thank you, Ian, and good morning, everyone. And I'm presenting ICBC Leasing. It's quite impressive because to join this panel as an investment part, and I take financing, ship financing, actually just to fit the puzzle. When shipping investment come, normally they will need financing tools. Actually, we're providing the tools. And surprisingly, because ICBC Leasing just established from 2007, and it's quite young actually in shipping sector, but actually from Chinese leasing perspective, it's the first Chinese leasing house established. And during the last decade, I think we have seen a very several cycle of the shipping market, and we have been go up and down. And to be honest, and we are still quite exciting and activity in the shipping financing and the leasing perspective. And to be honest, for the last year, and we have been strong challenging for this USTR thing, because we have seen, because during the first year when we established and when we built up to 400 vessels to our fleet, and I think it's quite straight away, because that's the period which we just need to do direct leasing and without too much thinking about the whole options which we can provide to our clients. But due to this USTR thing, and I think it make all the Chinese leasing house to think about more what we can provide and what the strategies and we can take and what we can tailor-made for each different period of the investment when our counterparty come to. So, and to conclude, I think during the last year, and we find out we can be more tailor-made for the options we can provide for leasing house, no matter from the shorter tenure and the flexibility on the purchase options. And also we can do pre-delivery financing and post-delivery financing, and this only depends on how the customer like. And also, to be honest, because the last year we have seen also RMB financing is a new options which we can provide. So maybe this is the whole conclusion we can find. And for USTR, I think it's a challenge, but as many of the speakers earlier said, when challenge come, normally we will have also some opportunities to have. And Chinese leasing become like 30% of the global shipping finance volume. And also because China as a global role not only consider about shipbuilding, but ship financing and also the energies and also the consumer of the energies. I think all this part give us some strengths on how to find the solutions for this.
That's, I think you've touched on some very, very interesting points there, and they're things that have been touching the desks of myself and quite a few of my colleagues globally as well. But could we maybe just go into a bit more detail around those? Because I think I'll be very interested in hearing some of your, not quite case studies, but some of the examples of some of the discussions that you've been having with clients, because you've touched on flexibility around purchase options, you've touched on pre-delivery financing. Now, let's for one moment consider me as I'm a ship owner. I'm either doing spot trade or I'm doing relatively short-term charters, and I want to have some flexibility at some point in the future, because the terms that you're able to offer are, you're able to lock in capital for quite a period of time. What would you say to me? I'm uncertain about what's going on. We have a suspension for a year. Tell me what you could offer me, a client like me. Let's go into some of that, because I think that's what the audience would be quite interested in.
Okay, it's like I will present you like what we can offer and flexibilities. Okay, and for normally, if you, we will go directly if you want seeking for new building project or for second hand, or otherwise if there's M&A also what we can provide. That will be the 3 different types. And for new buildings, normally we can do pre-delivery finance and up to like say how many years tenure. For example, normally like 10 years, 12 years, 15 years is the best terms we can get. But for now, because due to these flexibilities, we will normally provide, you can purchase back at the end of when you deliver the vessels or after 1 year, 2 years, because this is really depends on how the market goes. And we will give these options. And for the second hand, that will be more easier because second hand, it doesn't come across like pre-delivery finance. It will be more direct. And for this, normally we will have like, depends on the age of the vessels. But now, because during this, in terms of the market, I think we can take up to 12 or 15 years of the age. I think this is give some also some flexibilities when the investor come into some of the second hand. And also regarding on the ship types, because I think ICBC Leasing is the one of the leasing house which coverage as many of the types that we have. We have also from shipping and offshores and even cruise sectors. So we are confident and we can provide all the solutions to all the different types of the vessels. And among our 400 vessel fleet, and we cover most of the sectors. So we don't have any issues with any single of the types. And also we diversify our fleet as also Felix and Souren said. I think it's also good to cover the risk in the markets. And so come to the third one, if you would like to seek some M&A, and we can provide some your existing fleet finance in a very short terms, because normally M&A, it will be only like 1 or 2 years time. So we can consider, and because also ICBC Leasing is the wholly subsidiary of ICBC Bank, and ICBC Bank, we have a globally branch, and we can provide also the bank preference products together among with the leasings. That's what we can do, and that's what we already done during the last years. And we present some of the customers, and among with the leasing together with RCF, and also postponed after the delivery rate, we can do the bank loans. It's like a package deal. And I think this will also, because the challenge make us to turn around and to think of what we can put more advantage to our clients. So I think that's what we covered. And also during the last part, because what we can see during the last year, because Chinese RMB, due to the very comparative low interest of RMB investment now, and if you have shipbuilding in China, and also your future income also from China, and that's make a circle of RMB. So also we can provide financing on RMBs, and that will be comparative, have a full circles and at a low interest rate. But also we can provide flexibilities as when the circumstance and market change, and we can switch it RMB finance into dollars again. I think this also gives some new opportunities to our investor to think about.
Yeah, and I think that final point you mentioned about doing more RMB-based transactions is something we've seen more of, and some of our clients have actually recently converted some of their US dollar transactions into RMB facilities instead. So, no, that's fantastic. I mean, in terms of financing strategies, look, everyone on the panel is going to have some views, so I think we're going to have to get a few of those views with the last few minutes that we have available. So. Souren, I'm going to start with you, if I may, and this time with your Australis hat on. So we're going onto the debt side now, and so maybe you could tell us a little bit about your strategy from a financing perspective towards the GCC, as well as any challenges that you see, and really any advice that you'd give to groups in the region about how to make themselves that bit more attractive to international financiers.
Okay, sure. As a financier, we think our presence here locally on the ground adds a lot of value. So I grew up here, I speak Arabic, I travel around the region continuously, and of course I do live in Dubai. And I think that does add value to the relationships that we have, to the origination of market transactions that we can execute on, and ultimately to the comfort that the ship owner has by knocking on my door or sending me a WhatsApp message, typically to show up at their office and resolve a matter of clarification that they might have. From a strategic point of view, we do think that the Middle East will play an important role going forward in our book. It has, and it will continue to play that role. We think offshore will continue to play an important role in our book on the financing side as well. We've seen very interesting transactions on the offshore market over the last 2 years or so. I mean, in all honesty, my pipeline is dominated by offshore the last few years. This year has been a little bit more diverse. We've seen more transaction flow on tankers, and dry bulk, and slight transaction volume on the container ship market as well. So it's been more diverse, but we do continue to think that the offshore market will play a dominant role for this region, specifically the Middle East. And we think that we can cater to it, A, by being open to business, to offshore, and being one of the first to do so, so having built up expertise in that segment, and perhaps more particularly within the sub-segments of offshore, because we keep saying offshore, but offshore actually has a lot of various asset types, and some of them are quite niche. So we do think we've built up enough comfort and expertise to work with various asset types within the offshore segment. We've catered towards the needs of the region by perhaps 2 examples. By increasing our age limit, we work with tankers, bulkers, and container ships up to 25 years, and gas carriers and car carriers up to 30 years from our main pocket, which would be at the same terms largely as a younger vessel. And that is a real distinguishing factor compared to other financiers. And perhaps also to speak to the entrepreneurial nature of the region that Nicholas referred to earlier. We work with ship owners that have 1 or 2 ships. We work with investors that don't have any shipping track record. And the reason why we can do that is because we really do partner with the equity provider, with the ship owner. And we do that not just by providing financing terms and capital to gear up their investment, but we provide ship management services. We provide services on the insurance side, on the bunker trading side, on the crewing side, dry docking supervision services. So in some ways, we do offer a lot more than what just a capital provider would offer. And we've seen a lot of uptake for that, specifically in the Middle East. So I think that one-stop shop, to a degree, has been quite attractive for some of the ship owners here.
Great, thank you. And I think when we were talking last week, we were also talking about structure as well, weren't you, in terms of, you're very much an asset financier, less of a corporate financier. And that's very different from your good selves if you're talking to, prospective clients in the region about their structure. Can you just tell us a little bit about what your expectations would be in terms of structure?
Yes, and thanks, Souren, about the opinions from the investment, also as a debt and full stop, one-stop investment view. And from our side, because I think the strength of ICBC Leasing is more like the very stable and large scale of the finance which we can provide, and also actually the cheaper in cost compared to the investment side, because we are more like medium between the loan and the investment. So when we come to our counterparty, and first of all, I think we will present like a more stable and financing side for most of the ship owners, because actually we still do on the asset base. And it depends on the ship owners and among different sizes, and also it will be depends on the if there's a time charter attached, and also we can consider some of the very different cases if it's a project finance can be done. And so quite different with the investment. I think we are more like providing a long-term relationship and long-term in tenure and cooperation together with the ship owners. And during the different style and the different scale of the ship owners, we will do basically if the bank loans and it can be combined, and we definitely can do the same to the ship owners. And if not, if some of the bank loans is not quite fit for the owners, we can also provide some different options from the leasing side. I think this is some aid possible from our side.
Thanks, Anne. And I mean, you mentioned there about relationships, I think, was one point you mentioned. So, Felix, if I could maybe just turn to you, if that's okay, because in terms of, for you, from the investment side, suitability of partners, it's a slightly different kind of set of considerations. But again, maybe get some final words from you in terms of what you're looking for in terms of your partners to team up for an investment. But equally, when you're teaming up with those partners, what are you going to bring to the table from a financing perspective as well?
Oh, sure. Thank you very much. So I think, as mentioned before, we're looking for first-in-class partners with regard to access to projects, also in terms of charters, etc. So we really are living in joint ventures, right? So for us, it's important ultimately to have a partner that can rely on doing what they do best, be it project development, be it chartering, and then at the same time, we will be happily taking care of the rest of the structure, so to say, which also includes obtaining financing. So we as MPC Capital, we entertain, I would say, a very good lending network across the globe, so to say. Given the different structure and given the different assets that we invest in, so as I mentioned, from containers to offshore to chemicals, we financed this year with Japanese lenders, Scandinavian lenders, US lenders, while also obtaining ECA-backed financing for new build vessels in Europe, so to say, right? So I think we have quite competitive access with regard to lending sources and capital sources, all on a non-recourse basis. Hence, these lenders typically look towards us building a reliable and well-structured, say, platform or club deal that ultimately is investable and that can be lent towards. And in our opinion, this has been quite successful during the course of this year. And I think this is also one of the major aspects that we can offer to potential partners here in the GCC.
Great. Thanks, Felix. And then I think, Nicholas, we're approaching the last couple of minutes, so maybe a couple of last words from you in terms of what you're seeing on the debt side, because we've heard from a variety of different debt providers and obviously Felix's view of bringing financing to the region for their investments as well. Some final views from you, please.
Of course, happy to do that. I think in the current timing, it's probably the best time to be a borrower in the sense of how many options there are available to you in the region and globally. It's one of the first times that we see both banks, leasing houses being in a conference in the UAE. They don't visit much. And I can say that also for Singaporean banks, for Taiwanese banks, Japanese lessors and lenders. It's only now that this region is really being, let's say, in the sight of a lot of lenders. That said, most of the activity that we have advised on, that we see getting lifted, let's say, is from alternative financiers on the offshore side. And that has to do with the history of that sector in the last 15 years. A lot of the banks locally have had bad experiences, so they're not ready yet to invest in the same sort of manner and amounts. But they are, of course, still invested. We see a bifurcation of local lenders on their appetite for projects. A lot of the large banks here in the UAE, of course, they prefer to lend to ADNOC, LNS, AD Ports, Dubai World and the likes. Also, the deal size is much larger. There is possibility for syndication, so more corporate finance stuff. But still a lot of, even on the larger names, there are requirements for more niche assets to be financed, as Souren said, which is something the banks are not ready to digest yet. So we see this, I wouldn't call it really a paradox because we see it in other parts of the world. We see the local banks supporting national champions. And at the end of the day, most of these banks have a national bank element. It's part of their mandate to do so. And whatever is more, let's say, exotic or young would be financed from more opportunistic capital. I think by now all the alternative financiers have invested in the region. We've been lucky enough to advise clients on the other side of the straits, and we expect that to remain the theme for the next 12 to 24 months.
Great, thank you. Well, I could talk about this all afternoon, to be honest, because I did promise you a very diverse panel. I promised you some diverse views and some very interesting views. Hugely grateful to the panel for providing that, because I think what it's really shown is really the level of entrepreneurial spirit that there is in the region and amongst capital providers and investors who are coming to the region as well. So a huge thank you to the panel, and I'll hand over to our host. Thank you very much.